Today we are going to be looking at 10x DNA, so-called public venture capital, a German fund that does research on Palantir and related technology innovation stocks. We see Palantir and Tesla are tied for this firm's highest weighting at around 9%. And today we are going to be reading through their investment hypothesis to see their research on this company and where they see the stock headed, as they do provide some stock price targets. So once again, shout out to the 10x DNA research team. I will leave the link to this, their Twitter, other links in the description. Go follow them, and a thanks to them, of course, for providing this research. They say our perspective on the company and the stock continues to differ from assessments of the majority of analysts. They're convinced of the high relevance and fundamentally positive development of the company. So today we're going to be discussing the most important issues that currently concern Palantir investors. We believe that Palantir has built a technological advantage in the merging, analysis, and evaluation of highly complex data, and these capabilities will become significantly more important for companies and state institutions alike over the next 10 years. This is all the more true during periods of geopolitical crises as we are currently experiencing, as defense and crisis response budgets are significantly expanded in these times. Palantir's focus on data security and data protection continues to play a central role for us in the evolution of technology. In addition, from our point of view, the software offers significant advantages in flexible real-time connection and use of heterogeneous APIs and data formats. It makes it possible to simulate complex and extensive scenarios and model decision-making processes. In our discussions with customers currently using Palantir, this aspect has been repeatedly emphasized. The technology is rounded off by the high technical quality of implementation and support by Palantir. How is the growth developing, and what do we expect for the next few years? We know the sales growth was 41% in 2021 with strong US corporate business and weakening growth dynamics in governments. We're looking for that to adjust. Let's see what they say. Our updated baseline scenario assumes growth at the total sales level of 30 to 35% on average per year until 2030, slightly above the company's long-term guidance. Definitely agree with this. Let's keep going. Significant but less accelerated growth of business with the US government and government-related organizations, as well as a slight slowdown in growth in business with governments outside the US. Now, I think this is a bit backwards looking, and I think Palantir might actually have a shot at reversing this trend in the near term, as I just talked about in my last video. I think Europe is going to be huge on the government side as well as commercial, but on the government side, I think that's really going to pick up in the next couple years, and I think the US government business for Palantir also has some significant room to expand going forward, so I wouldn't count off the government Gotham business just yet. Actually, in my opinion, I am bullish on it in the near term. They're saying an average of 40 to 60% growth per year in business with US companies until 2025, downstream growth of business with European and other non-US companies with sales acceleration from 2023. That seems once again in line with my modeling that I've been doing on Palantir. Of course, commercial growth being stronger than the growth of the government side, as that is more mature, as we have seen. But I do think this growth rate is something that seems fairly in line with what I'm expecting. This is some more historical stuff here. The US corporate business has been particularly strong. Sales have doubled from 2020 of 99 million to 201 million. And in Europe and the rest of the world, we saw only growth of 16% in 2021. Once again, this is a growth figure I'm looking to see increase going forward. I think Q2 will be a move in the right direction here, and Q3 will be much better. Q4 on top of that. Government and government-related organizations. So growth in governments was 47% in 2021, but then we saw the drop to 26% in Q4. Now we're hitting on the fact that Palantir's expanding its sales force in the US from 12 to 80 employees. 55 new sales employees have been added in the last 9 months. They say after talking to the company, they were able to consolidate their hypothesis that new employees usually need 9 months to familiarize themselves sufficiently with the software and use cases. Okay, that's interesting. Subsequently, the employees are then fully available to the company's development for getting new customers and enable rapid scaling. And a lot of the sales team will actually be reaching their full development development potential in the coming months, and the sales expansion will continue. Palantir has taken similar measures in Europe and Asia. I was talking about Europe once again in the last video, talking about Palantir building out its Europe sales force as well. Very interesting. This is not something I had put a lot of thought into in terms of the amount of time it takes for a salesperson to be fully onboarded, but it does definitely make sense, about 9 months. And we know Palantir started its sales force in 2021 early on and has been building it out ever since, so it definitely makes sense. Need to give it some time to play out, especially as they continue hiring. It will only be a tailwind going forward. Palantir has issued a forecast of 30% plus growth. That is below our expectations. And I think Palantir could, if they wanted to, expand this revenue growth estimate, but I don't think they will do that for the long term. I think they will continue to provide guidance that exceeds that 30% growth. I know we're looking at a quarter in Q2 where that growth guidance was not significantly actually beating that, but I think we have room going forward because, as far as I'm concerned, that 30% is going to be nowhere near where Palantir ends up. I think they're going to significantly exceed this. So I do think they do have room to raise their expectations when they get the chance to going forward. Based on the updated company results, our interactions with Palantir, and discussions with customers, we have formulated the following core hypotheses. In our current base scenario, we expect a further weakening of the growth in the US government business for Palantir, but there is also upside potential. I think we're going to see some continuation of the weakness that we saw in the last 6 months, with some tremendous upside as Palantir gets to sign a lot of new contracts as we get into the latter half of the government budget cycle, billings, whatever you want to say about it. Those usually happen in Q2, Q3, and I really do think a lot of contracts are going to be rolling in. Hypothesis number 2, growth in non-US governments, which was almost 60% in 2021, will continue in a slightly weakened form in the coming years. That is nearly impossible to maintain as you look out 5 years, so obviously the growth rate has to come down considering how much that compounds over time. And some more research here, government business outside of the US contributed to sales of about 219 million. Continuing on, Germany talked about its 100 billion in the context of the Ukraine war for increasing its defense budget, and other European states are expected to follow suit. So Palantir is well positioned to acquire corresponding order volume, and that's reflected in what they call their upside scenario. The US corporate business will continue to benefit from the newly built sales team and the strength of the product. In the next 5 years, they expect a 40 to 50% growth rate. In the base case scenario, we had a 100% growth in 2021. Obviously, that can't continue, so the growth is driven by a significantly falling estimate of net dollar retention rate over time. So a compression in the NDR, which is fairly healthy, I guess you could say, in terms of what a forecasting, a conservative case is, and by further growth in the customer base. So CEO Alex Karp announced a further doubling of the business in 2022 on the Q4 2021 earnings call. Hypothesis number 4, the corporate business in Europe and the rest of the world will take a similar growth trend to business in the US, but they believe it's going to be a little bit delayed and start to accelerate growth in 2023 and 4. Enterprise software has been traditionally the strongest in the US. The strategic direction is set for the products which, with a little delay, are used worldwide to remain competitive. Palantir will not be an exception, and there are regional differences in corporate and decision-making structures that still have to prove the success of Palantir's growth strategy in Europe and Asia. They remain convicted that corresponding growth rates for the company can also be implemented in these markets for the medium term. The average turnover per customer, which is currently $1 million in the first year, will be reduced by modularization and new customer acquisition. In our model, we expect the average turnover per new customer to be further reduced by modularization, which is great to see. In the future, we expect an increase in average sales, so less turnover and higher revenue. After talking with Palantir Investor Relations, they expect business with corporate customers to be larger in the long term than business with governments. I think this is something even Wall Street expects, but it's good to have that in the thesis to be able to explain. Okay, now we get to the good stuff here. This was 2021 annually and a 2025 estimate, 2030 estimate, starting with the compound annual growth rate for government sales. It was 43%. We're looking to guide lower in 2025, compressed nicely down to 35 to 40, which I think is fairly high actually for that 2025, but then we're down to this 20 to 25%, which I also think could be a little high for 2030. Net dollar retention we see compressing over time. I think that looks fairly realistic, could even expand more. And the number of US customers, 66, 75, that seems about right, just eyeballing it. Now for the rest of the world, we see much higher growth in terms of the government side. Net dollar retention falls about in line by 2030, and the number of customers looks good as well. Now for the CAGR of the US commercial, 103 down to 45 to 50, 35 to 40, looks pretty good. Once again, I think these numbers actually look a little high just in terms of the percentage for the CAGR. I think it's very hard to tell just by looking at it, but once you understand how fast this sort of thing compounds, it just really starts to add up, and I think some of this could be a little unrealistic. In my modeling, I have them tapering off and slowing down each year going forward to much more of a baseline rate looking out to 2030, 2032. Net dollar retention, I do appreciate the compression they put into these numbers. Company count of about 500, which is interesting because Palantir talks about serving 6,000 commercial customers as their target for their TAM, and I do think that could be potentially an outsized goal. It might happen later rather than sooner, but we do need to remember that is their goal. So while we look down here for the rest of the world, 600 plus 500, we're looking nowhere near their goal of 6,000. So I think Palantir might end up having higher volume but lower margins perhaps as they get closer to that goal of 6,000, or they could just optimize for the higher margins. Just wanted to throw that out there so you can think about it. Rest of the world growth rate accelerating. It would be great to see this as a potential catalyst for Palantir if they're able to get to the rest of the world. Commercial has been rather carried by the US numbers of that 100% right there. If Palantir is able to kick it into gear for the rest of the world in commercial, it would be awesome to see. We see the compression with the net dollar retention. So what are some of the biggest risks for the growth? Palantir must continue to build a successful sales team. The successful growth strategy from the US must be able to transfer to the rest of the world, and further modularization and shortening of implementation times are not easy to implement. And there could be increasing competition from Google, IBM, Snowflake, Microsoft, or SAP. And there could be just prejudice against Palantir. But doesn't Palantir just buy all the growth through their SPAC investments? Palantir's SPAC investments enable it to position itself early in emerging technology fields. We know Palantir by now, after this report came out, is actually talking about winding down their SPAC investments. It's harmed the company a lot in terms of their quarterly reports, and while you might not want to necessarily focus on just quarterly figures and make that your long-term strategy, I think it has certainly not gone the way Palantir was expecting in terms of the financial impact, which does have an impact on how Palantir should be managing the business. Sales of strategic investments are seen by analysts as non-organic. However, 10x DNA sees these investments as positive and no mistake in generating sales from them. So, how does profitability and cash flow develop, and what influence does stock-based compensation have? They expect Palantir to achieve GAAP profitability in 2024, exactly when I think we have a potential to see Palantir maybe get a quarter in at the end of 2023, but largely I'm estimating for 2024 as well, and to see stock-based compensation fall significantly relative to sales by 2030. That's a bit of a red flag. Let's come back to that. And free cash flow generation is already a strength of Palantir. So if we read on them needing to target profitability in the medium term, and after they talked with Palantir Investor Relations, they assume about 36% of sales was for Q4 2021 stock-based compensation to reduce to 23% by 2025 and 10% by 2030. I really think it is going to be less than that. So what is the perspective on the valuation? Based on their assumptions that we've seen and that I've read through, they see a target of $37 to $42 for 2025. Based on the above mentioned growth assumptions into scenarios base and upside, the development of profitability, taking into account stock-based compensation, a stable relative capex margin, and an assumed expansion of working capital over time, we have carried out a cash flow assessment. We believe that this valuation methodology best takes into account Palantir's complex financial profile and our long-term investment horizon. All right, here's the bottom line. This model leads us to a current fair value of Palantir stock of $25 to $30 and the corresponding fair price target for 2025, as I mentioned, of about 37 to 42, which is decisive for us. So it seems they're expecting, based on this analysis, Palantir from $8 to return about 40% year on year to 2025. That would be huge to get to that about $42 price target. So it looks like that's the end of the report here. Once again, I'll leave it in the description. You can check it out on your own. Let me know what you think about this. You can check out my valuation model in the description as well, and I will catch you in the next video. Until next time.